getting that immunity towards this COVID virus. This is how Dr. Velumali spoke just now. And he said, actually speaking, even because of the conditions, we Indians are more resistant because we are more rough people as compared to the Americans and all who are soft. We get sick very fast in the sense they are not, their immunity is not much. And one big analysis is why is it that COVID is actually attacking more of the senior citizens is because their immunity is very low when they grow old. So that is the reason why actually the more the senior citizens should take more care as compared to the youngsters who are much more immune to such sicknesses. And of course, you take the normal precautions, whatever is being told as far as social distancing and all is concerned, and you take proper precautions on as far as the virus is concerned, definitely will be able to contain this virus at a much bigger scale. So today, not to take much of a time, I'm very, very proud and I should say I'm very, very privileged to have Mr. Sachin Relekar, who is the Chief Investment Officer of LIC Mutual Fund on the equity division. In the sense, he manages the equity division of LIC Mutual Fund, and he has joined LIC Mutual Fund actually in December 2012. From December 2012, he has risen to the post of the CIO. CIO means Chief Investment Officer of LIC. From February 2019, he has been the CIO. And he is the one who has actually started with this fund called LIC Large and Mid Cap Fund, because that is like his pet fund, which is there besides of course the large cap fund. But his baby, I should say, is the LIC Large and Mid Cap Fund, because it was started right at the time the NFO was started in 2015. And from that time, today, if you check on Google, the best performing large and mid cap fund, LIC Large and Mid Cap is standing number one. Because I myself checked it on Google and I have seen the performance also. It is very, very good. In fact, large and mid cap is basically taking from the basket of the large and mid cap stocks, and the managing is very, very well done. And I'm very, very fortunate that we are very close friends. And being close friends with such a big experience, and especially in the equity markets, I'm very honored and privileged to have him come specially for our programs as far as this masterclass is concerned. And we are definitely going to learn something new from him today. So what I would suggest is, as far as possible, even you can keep your camera modes off and listen to him carefully, because we can see all different positions and all whatever you're holding. So better put your cameras off because everybody can see it. Only keep your speakers on because some people are lying on the bed and all. We can see everything over here. So please put your cameras off and just have a very good listening, because we have to maintain dress code. Because I told last time, I have seen many people with banyans coming on the screen. So that is not a very good sign. But today I would request all of you all to put off your cameras and just keep on your screen mode on, whatever the screensaver is, and let's go over. And if you have any questions, please put it on the chat box. The chat box will be open. You can ask any questions you want, and at the end of it, after his talk, he will answer all your questions. So feel free to put your questions on the chat box, because I've muted all. Nobody will be allowed to speak within this time. So now I will hand over to our speaker for today. I will unmute him first because he's showing on mute for this. So yeah, okay. So good evening, sir, and a warm welcome. And we have an audience of already 54 people waiting to listen to you. So over to you, and with your expertise, we expect to learn something new today.
Sure. So I think thank you very much. It's always a pleasure to join Navemarg. As you were also pointed out, since 2015, actually, when first I met Dr. Celso, and since then, actually, this is 5 years, our friendships is continuing. I participated in several programs in Goa. We have otherwise also connected with each other quite a lot of times. So this is quite interesting, and I actually appreciate work which is happening over there in terms of charity, also the financial education which is going. So I think we are quite privileged in terms of providing our helping hand and being a part of this entire initiative. And actually, we had some debate or some sort of a discussion on what should be our topic. What should we say? I think we said we decided that we'll keep our message very simple, because it's about financial discipline. It's about financial savings, and especially when equity mutual funds is something which people look at, and over there, because of this volatility and all, people actually face a lot of questions as to what should I do, my earlier savings which have been accumulated, they have taken a hit, and all those questions start coming, and that doubt, confusion is in the mind, plus a lot of uncertainty people see around, and you kind of go off the track. The problem is when you go off the track, and that is where your entire saving discipline goes for a toss, and what happens is it can create so generally what we used to say is like fund might be a good performing fund, but the investor in that fund itself can underperform the fund just by being in and out of the fund or not being consistent with the saving discipline. That is quite, I mean, you might done a lot of good work in terms of taking the right advice, choosing a right fund, and starting off well. But when it comes to maintaining that discipline, you kind of drop out, and that is actually what results into kind of much less or suboptimal kind of outcomes which comes. And therefore it is important to understand why the discipline or the adherence to that discipline is important. First of all, there are two levels of investments which are happening. First of all, you being what you are, as in why you come to a mutual fund is because you get a professional management to manage your money, and while you might be an expert in your area of field, and but financial savings are there because there are certain financial goals, or there are certain needs otherwise also, or you want to create certain buffers in your financial life as you will require them for your children's education, for any of the bigger things in the life, or major purchases, or even post retirement life. So there are a number of goals, right? I mean, those goals can change or differ people to people, and therefore that financial saving discipline or decision has been taken. Now, one should not forget that when when that decision will be taken, and what was the decision background over there, and that should not actually get affected when the volatility part is there, because when you are choosing equity and asset class, the volatility always comes with that. So it is not nothing new on that. That is one. Second is, as I said, like people choosing to come to mutual fund. While at a micro level, in terms of I managing your money or overall mutual funds, the professional decisions which we make in terms of which company, how much cash versus which company, how much percentage and all, and what kind of industries, what analysis those, that's a very different kind of decision versus a decision one needs to be taken at an individual level. So in my case, I play two roles. So for example, I also do SIP in my own mutual fund. Now, that is a very separate decision than what I do in the fund actually. I mean, as in when that pool of money is available for managing, and how do I allocate that entire capital available in the fund versus how do I do my SIP every month. These are like two different things. When I'm doing SIP, I'm like every other investor. And for me, I have to think about what is my income levels, how much percentage of money I'm putting aside, so that when the future will be there, and when the future need will arise, I should have some kind of a corpus to fall back on. And that continues. So I might see the volatility much up and close compared to even you people. As in every day, I will be going into the market scenario. We'll be talking to the team. We are seeing the screen and we're seeing the prices and all that. So seeing that so much closely, I can feel that volatility much much more intensely than perhaps you might be feeling, because you might be looking at your NAV at the end of the week or a day or even a month. I don't know. I mean, frequency might be much lesser, but that volatility does not affect a SIP investor in me, and that's how it should be, because that is the most important discipline which one needs to bring in. As I said, therefore, the asset allocation decision which we took when when we had those for certain financial goals in mind are very important to adhere, and that needs to be clearly understood. And accordingly, those asset allocation decisions needs to be continued. This, I think, is a very simple but very important message which actually I wanted to convey. Once that understanding is clear, then it doesn't matter as to like what is my prediction of the market volatility or what is my prediction of Sensex versus somebody else coming on this show or somewhere in other forum, and he might be differing with me. The investment professionals might differ on their take of the current situation, and therefore we all might end up buying or creating a different kind of portfolio. But more or less, a large part of our investment outcome will be driven by how the environment will move and what has been the bigger or a longer term trend, and then we can make a difference between ourselves in terms of how I position versus somebody else position. Likewise, Dr. was mentioning large and mid fund of ours done this way versus somebody else large and mid fund done that way. That is all right. But if you look at that entire large and mid category would have moved in a certain direction, and that is all driven by underlying fundamentals of the country as a whole, underlying fundamentals of the businesses in this country as a whole, and that is some kind of a trend you can clearly see. So now going back to and therefore it is important that yes, you have to choose the right fund manager, right scheme of that, and all that advice is also important. But along with that, you also should have a kind of a faith or kind of visibility about how this entire underlying trend is also going. We are quite confident that that trend is there, and within that trend, the job of choosing right businesses and allocating capital at the right prices is what the responsibility of the professional fund manager is. While your responsibility is towards your financial goals and your family for creating that corpus and keeping aside that saving on a periodic or whatever is your frequency. You might be doing a fortnightly SIP or you might be doing a monthly SIP, or some people are even opting for a daily SIP because that's a lower ticket size. So whatever that discipline which you adopted, which is suiting your income profile, that needs to be adhered to, and that is important because that importance will actually come out, and that indication of that important discipline will actually come out when you actually hit the timeline in terms of when your goal is there, and that time what is your corpus is there, and can you fall back on that, right? So that is how it is. In terms of fundamentals of investment environment currently, so I'll just spend some time about it, not really getting into elaborate technical discussion on that. First of all, this is not a recession, which is this is not a shock which has happened because you are kind of there are. If you look at 2007-8, just go back an example, which actually most of you will have that in the recent memory. So there were excesses which got built in the one segment of the economy in US, which is like a subprime houses, okay. And people went on a lending spree, and there was a lot of leverage got built in it. And when the realization hit home, as in this has gone too far, that time the asset prices collapsed, and therefore the banks suffered, and it took a lot of time for people to pay off those debts and eventually come out of that situation. Now, what is that? This is not a cyclical, kind of a crash which has happened. There was nothing like excesses which got built in any of the segments and all that. We just got a hit with medical emergency or healthcare emergency, and this has come from unknown. This is more like a event-driven recession which they got hit with. It has not impacted on anybody's ability or anybody's skill set to get along with life in terms of like we are all sitting at home, perhaps at a distance, and therefore once as and when uh, we kind of adopt to the life, whether we get a cure, we get a vaccine, or we kind of adopt to a better lifestyle so that we all remain immune. So perhaps, so my skill set is allocating money to the equity as an asset class. That is not affected because of this, or not, nobody is stopping me, or my business, as in my company, not affected because of this. We are still very much intact and all that. It has not created any kind of liabilities for us. It is actually that shock, which is more like an event. And generally, what happens is event-driven recessions have also an element of sharper recovery. Okay. Now, in this case, I'm not saying that is the only scenario which can play out. It can be, different scenarios, alternate scenarios can all can happen. but genesis of this is it is more of a shock, and you kind of hit by a very unknown kind of thing. And now the entire world scientific power has been like thrown at it, and there's a lot of medical advice available, and there are a lot of adoption which is also possible, and therefore there are a lot of technology is also available wherein adoption will happen. Now, as we go forward in the time, you will see some of these adoption models coming through, and also you will see more and more understanding about the whole thing, like what you were understanding 5 weeks back versus what you are understanding today, obviously is much higher. At the same time, as we go ahead in time, you will also find that the more and better understanding of how to remain immune to this, how to avoid the whole infection itself, and what kind of medical and data scientist analysis of this or understanding is there, and therefore how do we combat this also will come forward. And it might have a positive surprises, it might have a negative surprises, but definitely you will get on very. The kind of coping up with this entire thing will only keep on getting better. So, and that is what is important. And at the same time, likewise, what we are trying to do is stay away from this entire thing and survive and remain healthy. So, same thing is businesses also doing. What they are doing is they are containing the cost, they are kind of bringing down their capital expenditure, conserving the cash, so that they all see to this. Therefore, then the resilience is what is getting tested. Once you have resilience, if you emerge from this without resilience, then again you have a kind of normalcy coming in. And then those who survive, obviously they will collect the spoils and they will actually emerge much more strong. That is what happens in every crisis. This crisis will also happen. What we and I are not able to perhaps estimate is what is the length of the time in this, or what kind of how long it will last, and whether we will be able to put a cap on the infections or kind of fatality and all. Those uncertainties there, but one thing is for sure that we all will go to the other end of it, and perhaps if everything goes right, as in what are the vaccines and all, we could be much sooner than what has been feared by the market. And therefore the this maintenance of this consistency of this financial saving discipline is all the more important, because that also is offering you an opportunity, right? So so I'll stop here. I think I tried to give a quite a good context here, and I think we can set the Q&A now, right?
Yes. Okay. Some few of the questions which I have seen exactly. There's not much this, but what do you feel as far as this recovery of this coronavirus is concerned? Like, how do you feel the market? How long will it take for this recovery to happen as far as Indian economy is concerned?
So, as far as Indian economy is concerned, that's a very broad question. Actually, there are different aspects of it. First of all, as you know, the country itself is like not affected uniformly. I mean, likewise, we are in Mumbai or Maharashtra. Perhaps we are the most affected. And then there are sporadic cities where they are not actually close by to Mumbai, but they are at a distance. Perhaps they have better international connectivity, and therefore or they have more cultural intimacy, therefore they are affected more. So there is nothing like a pattern which we are seeing, but the country is like, there are nothing like a patches of green zone and patches of red zone, and therefore those you cannot see. So country is affected in a differing with a varying different degrees of infections are there. Some of the crowded cities like Bangalore actually had cope up with it very strongly. So that countrywide question is very broad. I mean, but if you look at what is important is like was what people are saying, like the way. And by the way, this is very uniform. It is not just for country. It is for the world as a whole. All the toolkit is actually similar as to how you adapt to the lifestyle. As in, you're also a medical professional, like, and the knowledge perhaps should be better than me, of course. So you have to do the social distancing, you have to wear the mask, you have to take care of yourself, and if you are feeling any, I mean, you have to save others from getting infected if you feel that I'm in a kind of a doubtful situation. So if everybody does that job, that's where you go back to the normalcy. But as a country as a whole, first of all, government has done phenomenal thing in terms of, I mean, not only that package number, which is quite large, but also there are a lot of quality reforms which have come through. Now the problem is perhaps the market has got disappointed because some of those things cannot be of an immediate impact in terms of, but the long term impact of some of these sectors which have got opened up and FDI, I mean even the strategic sectors have been opened for the private competition. That's great. I mean in normal times perhaps these things could not have been pushed through, but today there is hardly any noise against it, and because this was a need of I mean our so as and when you kind of get back to the normal, all these reforms will actually start showing a great impact. Plus, there is a huge supply chain reorganization globally which is happening. So there is a huge amount of chemical industries. Apple has shown very strong willingness of putting down almost $40 billion of FDI. You had seen kind of investment in one of the telecom companies which is happening. So if anybody is doubting the potential or the long term potential, I don't think Facebook will actually release some $7 billion, or I don't think Walmart would have spent $16 billion in buying Flipkart in this country. I mean, nobody is asking that as a question that whether the long term potential in the country is a problem or not. The question about do you have a toolkit available to get along with it or to adapt to this, and whether whenever the medical cure is available, does the country has financial ability to make it available for the citizens, and does the country has a technological capability to make it available for the people? I don't think that is in a doubt. I mean, it's a question which is to be addressed, and there is a lot of scientific brain power as well as the financial power which is thrown at it. So now that is uncertain, as in when we'll get it, in what format, and whether it will be a new type of a thing, or maybe a existing drug might get repurposed for it, which are all, that is not my area of competence. But I'm just saying, in terms of potential, in terms of our ability to make it available to the citizens, I don't think that needs to be doubted at all. I mean, we have quite a large and a very big economy to absorb that.
Okay, another small question actually I had in doubt in mind now is there will be certain sectors which will be badly hit now during this time, especially the airlines, the hotel industry, the tourism.
Yeah.
All these will be very badly hit, and because now they'll be undergoing very big losses.
Yeah.
Because, like say for example, aviation industry, all aircrafts are grounded. And
Yeah.
even now, when it starts back, the middle seat will have to be taken out. In the sense, they won't be able to take the middle seat. So the construction, I mean, the aviation industry, or say even the tourism industry or hospitality industry, how are they going to cope up with this loss? And especially now in mutual funds which have taken up these stocks. So suppose we have taken up a stock of say SpiceJet or Indigo.
Yeah.
How will the mutual fund function as far as that? Will it sell it off the stock or will it keep the stock on?
Okay, so first of all, there are sectors. I mean, everybody is not, every business is not affected by it in the same proportion. Likewise, every countries, all parts are not affected by the same proportion. Similarly, every business is not affected by the same proportion, which is the right thing. Some of the things are at the eye of the stock; they are affected the most. Like you are not traveling. With the public transport as of now is not available, but air travel obviously it's discretionary. Instead of I traveling down to Goa, might be doing a Zoom call, and I can avoid that because I don't want to get exposed to this. So as long as I have a alternate way of doing it, I will try to do it. However, as far as the airlines or the hotels and all these industries are concerned, which are most severely hit. Okay, now the question is, what happens is there is a business model, has certain business model either have adaptability in terms of change which has been hit to them, or they are quite fragile, like they can actually break. I mean, they can. It's like glass. If it breaks, and you cannot again connect the pieces and make a glass. It's that kind of a business model. So business models which are actually having a lot of leverage and legacies of the past, or the very capital intensive business models, and therefore if they get hit because of this, like you pointed out, the hotel. I mean, if the hotel is too much leverage and you suddenly have loss of revenue visibility for even couple of quarters, what happens is your debt becomes completely unmanageable, or the just the interest cost piles up so much that you cannot pay off. But at the same time, what happens is within the industry there are survivors. Okay, so nobody is saying that we will never have air travel. Like we are in 2020. I don't think in 2023 also will not have air travel. Okay, we will have air travel by then. We will also go to five-star hotel, or we'll also go to the pubs where actually the intimacy or the closeness of the people is quite higher. So, but current situation will push a lot of people on the brink of collapse, which is the case. But it also will keep some of the things, some of the people from going to bankrupt, or they will actually able to see through this. The resilience, because of the resilience, because they were very prudent in terms of how they manage their cash flows, how they manage their balance sheets, how they manage their debt. Now, those who survive, as I said, every crisis, at every time we are seeing this, the survivors are the ones who collect the spoils, and they are the biggest beneficiaries of the crisis. Similar thing will happen in these industries also. The hotels which are having bigger chains, at the same time they have lesser leverage but better brand, known for services, known for service quality. They will actually be in a bigger, much better health when they will come out of the crisis, and they will also able to gain this entire market share which is left alone, or entire opportunity which is nobody is capturing because they could not see through this crisis. So they will come out much more stronger. Classic example today, we are in a COVID situation, and there are telecom stocks which are lifetime highs. And 30, 3 years back, the competition was about 13 players and all that. Today there are 3 players, and maybe 2.5. Okay, and they are affecting most of the investments. Why? Because they endured the entire pain, they survived the crisis, and today the entire market is left useless. So that is what happens. All you have to do is figure out what are the resilient businesses into this, not the industries. Within industries, which companies are resilient, and whether they have the fire, they have the strength enough to see through entire thing. And if they scale through all these things with very little damage, they will be the biggest wealth creators also.
Okay, another small question is like now, if you can give from your experience, because most of our clients are most of them are new into investments. How
Okay.
has the impact been of FIIs and what is DIIs? Is what is that FIIs and DIIs? Because we see it on the newspaper again and again. Because I know, but most of them are not aware what is FIIs and what is DIIs.
Yeah, good question. So I'm quite good actually. I mean, ask any questions. It's need not be very technical. So FI is nothing but a foreign institutional investors, and they come in all different shapes and all different origins. So there are number of ways. I mean, likewise in India there are domestic investors. DI is nothing but domestic institutional investors. So likewise in India we have mutual funds, we have insurance companies, we do, and these are actually mainly the two parts. Then there are also banks which are also the investors into this. So they are called institutional investors. Okay, these are the only types which are available by and large in India. Abroad, the types are much more because they have very large pension fund. They also have sovereign wealth fund, as in the government collects a lot of taxes. In the over there, unlike our government, they are actually in surplus. So that surplus money is being managed by those sovereign wealth funds, which actually have nothing but a vehicle for deploying the capital into the other countries, especially the emerging countries like India or Southeast Asia. So that is another entity. Then there is a pension fund. Pension fund, by the way, is a much bigger animal over there compared to us, just because there are a lot of savings, and the population over there is much older, and they have a lot of retirement savings which needs to be deployed so that they meet the retirement people requirement. Apart from that, there are a lot of smaller platforms which raise money like 200 billion, 300 billion, which is very small in that context. But they raise money from several institutions, and they also deploy into the emerging markets. Then there are private equity players. So all sorts of things. So FII is a very heterogeneous group. It is not a single entity, and every entity has different kind of compulsions also. So whenever you read, see, first of all, DI is very homogeneous. Like I said, first of all, the types are not very high. You have largely a mutual fund and then insurance companies. And sources for both of the funds are actually people like you. I mean, by and large. common people, citizens of India who are saving for insurance or for mutual fund, they are the source of it. So we both actually act very much similar because our cash flow, inflow, outflow depends on how our investors are doing, and by and large we are only getting net inflows only, so we don't sell most of it. Okay, while FIIs are very heterogeneous group and there are different requirements at different point in time, and also their exposure is to a different set of asset classes also. So they also switch between different asset classes. So at some certain point in times, they might be investing into the, let's say they choose to invest into emerging market. Within that, there are funds who might do only ex-China, as in they will not go into China, but they will go into the rest of the Asia. Okay, so they will be immune to what happens in China. But if there is a fund which is entirely into Asia and there is a crisis in China and that fund faces reduction because of the Chinese issue, then fund might actually also offload his investment in India. Okay. Also, private equity, like if private equity is nothing but they borrow at one hand and invest into other on the other hand. So if his liability side faces some trouble, he might also have to offload it. So reasons for selling for each of these things are not just about economic outlook also, which is more by the time most of the time is there, but there are other outlooks or other reasons also for that, which actually drives their actions. So when you are reading FISL sold this much versus FI bought this much, please understand that FII is a very, very heterogeneous group, and they come from different geographies also. Something like Nordia, which is a very small country, but it runs a very large sovereign wealth fund, and something like US, which is a very large country, they don't have sovereign wealth fund. So so it's very different. So what kind of pressures or what kind of polls they are facing, depending on also that actions also get driven. So don't try to do it as a product approach that FIs are selling, that means there is a problem, or FIs are coming, that means there is a lot of positivity. Our generally the asset prices or asset equity as an asset class, the prices will depend on what is the earning outlook for the underlying entity. The inflow outflow part is more of a technical nature than actually the fundamental nature.
Okay. Now another small question is now how are we so much lucky that RBI is taking so much of efforts to control the economy? Like, can you explain what is the RBI doing in such a crisis now?
So, the one exceptional thing about this, slightly technical, I'm also not trying to make it complex, but still it has some technical element. First of all, if you look at 2007-8, the crisis when that happened, all of you must have heard about Lehman Brothers went into a bank. Lehman Brothers, this was a large investment bank over there, which went into the bankruptcy. It collapsed. And what happened is it collapsed because it could not pay off its liabilities, and central bank over there let it fail. Now after that, they realized that failure of such systemically important institution means entire system get frozen. Nothing moves in the system. Nobody lends to each other. Nobody trusts each other because don't know who will go down the tube then. And that trust factor, if it is removed, then we will not able to function. Likewise, you giving putting money in a bank is possible only if you believe that whenever you want that money back, you could able to withdraw. Otherwise, you will not. So trust factor is very important, and whole financial system works on that. So 2007-8, when they let Lehman Brothers fail, the entire market froze, like money market froze, when the banks were not lending to each other. Forget about banks lending to the common people. So there were a lot of lessons learned from that. Come 2019-20, as in 2021, when this crisis hit, all the policy kits, all the policies which are there in terms of making liquidity available, in terms of assuring to the market that there will be market for below investment grade bonds or all that, all those tools from the policy kit were being brought out and implemented at a very fast rate. So the policy response was actually able to put the floor under in terms of this crisis, in terms of this deteriorating situation. Because of that policy backstop, what happened is the credit system remained in healthy. Even today, NBFCs, banks, or companies can go into the bond market and raise money. Even today, equity markets are functioning quite well. So if the company's numbers are good and results are good, even those are able to come to the market and raise money. At the same time, good companies are also still able to hold on to the valuations. Absent this RBI actions or policy response, perhaps would have a very dislocated market. That is actually the big thing which they have done by ensuring that they are available in terms of any good credit will get funding. It ensures that the proper functioning of the market continues. So that is what it has done. In the simple terms, they said if you are a credible person, if you are a credible entity, finance will be made available.
Okay. Now, another thing I just wanted to explain regarding the for all these participants today, what is exactly this repo rate and reverse repo rate? Because we keep on hearing it every time. Because
Okay.
I'm sure many of them. It's a very simple this, but what exactly it means?
So basically, what happens is banks have certain. Every bank is supposed to maintain certain balances with the RBI. Okay. Why that is so is because when you put money into the bank, let's say bank has 100 rupees as a deposits, right? And maybe it has a capital of 10 rupees. So total liability of a bank is 110. If you understand the balance sheet side, liability is the money which you owe to the other people. Okay. So when you're putting deposit into the bank actually owes you back. Like your the bank is supposed to give that money back to you whenever you want it. So that's the liability to the bank. So 110, right? Now 110 as in 10 rupees is maybe the owners of the bank which is put over there, and 100 is what you have lent to the bank. As in your deposit is nothing but you're given a lending to the bank. So 110, right? Now that 110 bank can use to lend onwards so that it earns money on that. But what happens is if the bank lend entire money onwards and some of those money doesn't come back, then what happens is you will not get your money back, right? So let's say bank had 110 rupees, it lends 110, and let's say 10 rupees of that don't come back. So bank is left with only 110. So first thing which will get hit is his own capital. Fine. But if that thing dips to 90 or less than 100, then some of you as a depositor may not get paid, right? So what RBI try to ensure is there is always a safety and liquidity which is available. Therefore, banks are asked to maintain certain statutory reserves. So that is called SLR, which is statutory liquidity reserve ratio, and there are CRRs and all that. Now, when they are asked to maintain this money, as in, so out of 110, bank is not allowed to lend everything. They are allowed to only lend a certain portion. Let's not get into the ratio, but just for simplicity, assume that out of 110, bank is allowed to lend only 65. So what happens to balance 45 rupees? That 45 rupees is nothing but it is parked with the RBI. Okay. Now, on that, RBI gives them certain interest, right? Now, in times when banks require money and it is not available in the market, then you go and borrow from the RBI itself, which is nothing but a reversal. Okay. So over there, when you put money or a bank puts money with the RBI, that happens at a certain rate, and that rate is always lower because you are putting money into the RBI. When you borrow from the RBI, there is some markup on that. And generally, if the RBI wants to encourage you to borrow more so that you lend onwards more, they will bring this down, the interest rates which they are offering to the bank for keeping the money with them. So that removes the. So what happens is why banks actually keep excess money than what is required with the RBI is. Supposing I am very pessimistic about the whole scenario, I don't want to lend. I just want to preserve the money with me. So I cannot just keep that money in a deposit box because it will not earn anything. So for even if it earns less, fine, but it should earn something. For that, I will start depositing excess money with the RBI. Okay. To discourage that, RBI brings down that interest rate. It makes it less attractive so that people don't keep the money over there. And that is where all these interest rate policies which comes, that you will read in the paper that RBI has brought down the interest rate repo rate or reverse repo rate down and up and all that, is because of that. What it's just a central bank which is like a banker of a banks or banker of a last resort. I hope I made it clear. It's not confusing.
Okay. Another small question which I'm seeing many of the clients asking is actually, is it how do we judge a company if we want to invest? Is it better to buy direct stocks or to invest through mutual funds? What is the benefits of mutual fund versus direct equity?
Actually, if you have a lot of time and if you are a dedicated professional investor, only then it makes sense to dabble into all this. I mean, for education purpose, maybe you can play around with a very small corpus and try to look at it. It's a good learning, I will say. But if you are serious about your savings and there are certain financial goals which matters to you a lot, as in they are very imperative kind of in your life, uh, then that corpus should not be built through this kind of a trading, or unless you are saying I have a professional experience, I have a professional background, and I have a track record of doing that. Okay, so in that case, it's a different proposition. But just by so far the number of questions which have been asked, I mean, if I go by that, I think my advice is for the fun sake or just for if you want to take an experience, you can look at some small sum and which the money which you can afford to lose permanently. Don't I mean that doesn't matter to you. That's a very costly education, by the way. But if you want to have that, but otherwise, if there are financial goals, there are savings which matters to you, then a professional fund manager makes a lot of difference. It comes with a small fee, by the way. It's very liquid. It's very tax efficient vehicle. There are a number of advantages. First of all, you put 100 rupees with us, and you want to withdraw 10 rupees, you want to withdraw 5, it is not a problem. I mean, you can withdraw what you want. It's very divisible. So that liquidity is available anytime. It's transparent. You can look at your corpus value every day. And of course, if you don't like what any of the fund manager is doing, you also have a lot of choice available. So there is enough of multiple options which are there. And also within that option, it is not just about equity. You have, depending on your risk taking ability, appetite, there are a number of other products which are also available. So mutual fund actually takes care of a lot of your financial saving requirement and your financial needs. So it's a vehicle which is very transparent, so very very I mean, regulations are very clear over there. All are aligned for the minority shareholder, minority unit holders, so that transparency is ensured and the safety of the capital is ensured. So all those things are there. So if you look at these advantages versus and at the most, what will you achieve by managing your money by own? I mean, the difference will be the fees which perhaps you are paying. And by the way, that fees is very minuscule compared to what kind of risk which can incur from that. So I think risk reward doesn't make any choice makes very clear impact. So that's the answer.
Yeah, okay. And another small point, actually, they have asked me to explain this. I've already explained. What is the difference between a small cap, large cap, and mid cap? What is actually that mid cap, small cap, and large cap?
So all our companies, first of all, there are small. So CAP stands for capitalization, as in market capitalization. First of all, that. What is market capitalization? Market capitalization is the value market puts on a company's business. Okay. Now, that how does that arrive? Is company has certain number of shares outstanding. If you multiply that number by the market price, you get a market capitalization. Okay. Now, small cap is nothing but below certain level of size is called as a market capitalization. So now, earlier everybody had a lot of their own definitions. Now SEBI has come up with a clear standard formula, and they said if a company's market cap is falling among 1 to 100, okay, of the top companies, it will be categorized as a large cap company. This is a large market capitalization company. 101 to 250 is that group is called as a mid cap company, and beyond that is basically small cap company. So that's all. I mean, it is not a very great science. Some people specialize in, or some funds focused on small cap companies, as in they will invest only into 5-1 to beyond companies in terms of market capitalization ranking. Mid cap will focus on 101 to 250, and large cap will focus on this. And there are then there are then mix or multi or flexi capital for cap fund, which is nothing but it will invest anywhere it wants to. That's how. Or for example, we have large and mid cap fund, so it invests only in 1 to 250 companies.
Okay. And how do you all actually do the stock selection? Like now, say suppose large and mid cap, how do the stocks are picked up from the basket? What are the things that you check out for?
So I think there we have got every individual investor will have approach to selecting a business, because this now it's like a very specific call, as in which company to be bought and which company not to be bought. I think for us it is very clear framework which is there. So we say risk management is a very important part. Like whether I said, in this crisis certain companies will be fragile, they will not be actually able to get back because of the pain which is there. So that is the risk. So when you are saying risk management is the focus, you try to avoid the issues where the chances of losing capital is very high. So what you say is, okay, so I'm explaining our framework, and if you ask somebody else, he will come up with a different framework also. But essence is you try to manage the risk at the first, and then you try to capture the best quality. So in our case, what we do is, because we have background in the capital markets, like my team is also more than a decade experience, team which is there. So we know a lot of things which are there in the market, and therefore we also are known in the market. So what happens is, so we have a good understanding of the management qualities and the corporate governance over there. So we are very fixated on having a good management quality in our companies, in our portfolio. That is number one. So first factor we look at is the people. If we like people over there, that is a first tick. Then what we look at is the balance sheet itself. We don't want a very high leverage company. If leverage is high, what happens is you can fuel a growth with the leverage. But when this kind of crisis happens, that leverage can become a big bottleneck, big issue for you. It can actually destroy the business also. So we don't want a leverage situation which can be alarming. Okay, and that is a judgment call as to what will be alarming versus what is manageable. But ideally, would like to have a company which does not have this kind of issue. And third is, what we look at is, like, does the company has a value proposition for the customers? As in, is it in the business for the right reason? Is the customer are benefiting because of dealing with this company? That is the next reason. And finally, what we look for is this good balance sheet and a good value proposition will lead to a growth. Okay, so all these factors together, if they are present, then that is a business which is selected, and then you do the valuation, because based on the cash flows and profitability and all that, you get a certain value of that business, which is arrived by different methods. Either you do and there are a number of methods. I mean, there is an entire valuation is subject by itself. So what we do is a discounted cash flow method, or we look at the comparative valuations and all that. And if we believe the price is fair, then we start buying that company, and then we sit there for a longer term. So simple thing is, you buy a good. First of all, look at the management, look at the balance sheet which is healthy, look at the value proposition which they are offering to the customer, and is there a growth possibility? If these things are possible, then you just think about whether the price is appropriate or not.
Okay, so now from your own personal experience, now since we are almost coming up to the time, from your own personal experience, like how would you give this confidence to our investors to actually stay invested, and actually whether to take this as an opportunity or as like a threat, I should say, as far as this coronavirus is concerned, because they need that confidence from your side, because all our investors,
So
they
first of all, you all know what is going around, okay? And while the mind is occupied with all this, you also try to think like how will you look back at May 22 in May 2021. Okay, in that itself, if you just change the framework, you will find that a lot of these answers will become clearer to you as to like obviously May 2021 will be far better than May 2020. I mean, where we are today, because we are not going to be confined to our houses, or we are not going to be. I mean, we'll adapt to this. Like we will go with social distancing. We'll perhaps have a better health practices, hygiene practices, all that. But as a human, or as a like what we are quite adaptable, and we are here because we are adaptable, right? And therefore, we'll also adapt to this entire pandemic issue and all that. World over, that is happening. It is not just India. And of course, there's so much. I don't have insight onto that, but there is reasonable grounds to hope that you also have the solution for this entire thing. I'm saying, assuming those things are not there, still you will adopt. Okay, first. Secondly, look at how some of the smart money is actually looking at India, as in what people are thinking, where the money is coming. I mean, you have got a large FDI, for a telecom business over here. We are all adopted all these data practices. We had done one call with an IT expert, and this entire work from home thing. They said India was the. I mean, this was for the regarding IT companies, which also are working from the home. And over there, the data security, privacy, because the client data is quite confidential. This is all B2B. It's not like us, which perhaps if somebody else also listen to this call doesn't matter. But over there, if you are dealing with Bank of America as your client, I mean, that data cannot be, that data security is very important. So work from home actually, I mean, what they were saying is because they're outsourcing the work to various continent and all that, India showed the biggest resilience, as in they adopted it very fast. They were online most of the time, as in the efficiency was very high, and that has given a big uptick in terms of how they are looking at India, because if there are crisis happens or the crisis continues, then who to choose in terms of outsourcing your work? India ranks much higher in that. I mean, we were online better. Even in this kind of a situation, our utilities are functioning quite well because they also have to go and do the work. So they are doing. We are not seeing any break into that. So all the utilities are functioning very well. The life support is happening quite well. So those are things that also all underlines what kind of capabilities we have. And as I said, look at the money which are getting the hard money, which is getting invested into India. And also I spoke about all these reforms plus the steps which government has taken, and the opportunities in terms of supply chain reorg and all those are available. So that's all there. I mean, all you have to do is do your job properly, so that the outcome are in line. If we do if we lessen our intention, focus on our job, then the problem is, and our job is maintaining the discipline of financial saving. If we lessen that, and then later on the things change favorably, uh, you will only buy the same stuff at a higher price. That's all.
That's anyhow. That's a very good suggestion and explanation what you have given. In fact, now I've actually seen all the questions which have come. It's mostly like the ones which I have to answer personally. Like they're asking, like which fund category should we go along for investment? For that, it's only on personal basis. Most of the questions I'll be answering later on the personal basis. But the thing is, I'm very very happy that today we could answer many of the doubts which the clients had. And I must say a very, very big thank you to Sachin for giving your time and especially sharing it from your heart as far as your experience is concerned. Because this is like totally extempore what you have spoken. You have not spoken like prepared speech or anything.
No.
It's like it has come extempore. And actually, what I've noticed after the questions started coming out, you started speaking more from the heart. So that's what you wanted to know. What was the rhythm? And then now you got the answers, and we all got the answers from your side. I didn't want to take it much technical part of it, but it's more because this all the participants over here are basically people who are new into this industry as far as mutual funds and shares, and many of them have panicked actually in this situation because of the market fall. The panic was very high, but luckily in our case, as far as Goa is concerned, we managed to retain the redemptions. We have not had a single redemption after the 17th of March, because I've seen not a single client has done any redemption other than the ones who have actually panic, but there are very, very few of them. But those who have redeemed have actually lost quite a lot of money in this situation.
Okay.
And I'm sure this market has to recover back because India is a country which is definitely going to recover the fastest because I know the population is huge. So the recovery has to be faster because you cannot stay in a lockdown for long. And definitely, once the market goes up, I only hope people don't suffer from FOMO after. That FOMO means the fear of missing out. Because I'm 100% by the time, like how you said, by May 2021, the situation will be totally different from what it is today. So this is an opportunity for us to actually grab more number of units when the NEVs are low and bring down our average price as far as SIPs are concerned. Because if you do a top up and the prices are discounted, automatically your average buying price comes down. And the moment your today's price goes above your average price, then it becomes profit. So the lower you bring down your average, the faster you gain more profits. And the units you buy, you accumulate more units, automatically the profits start increasing. This is what I have learned during the lockdown. So we are trying to get maximum units bought now when the things are available cheaper. So that this becomes an opportunity because 100% what I have noticed is this time the market recovery is going to be U-shaped rather than V-shaped. In the sense there'll be a lot of time for recession for the regrowth.
Yeah.
It's not like immediate recovery. It's not going to be an immediate recovery, but recovery will be 100% after some time. In the sense, it can be after 8 months, it can be after 1 year, and definitely once the vaccine comes and everything is under control, the recovery will start immediately. And who will be the ones who will be the winners are the ones who invest when the market is down. So this is the best time to invest as compared to redeeming and booking losses as of now. It is like just like an expectation. What I say, if last year the gold prices were 3,000 and today it has come to 2,500, what you would do in such a situation? Sell the gold or buy more gold. So same way in equity, this is the same situation now. The prices are lower, so you can actually buy. Like even I can give an example of LIC large and mid cap. Till February, the NAV was around 16 rupees. Suddenly in the month of March, it dropped down to 12 rupees. So at 12 rupees, if you buy, and if it recovers after 1 year, you can see how much of profit you can make in that same fund. So buying units when it is available cheaper is always better as if you want to book profits in the later stages. But if you feel that the Indian economy will not recover, then I feel best is to keep like you will keep money lying in the bank and it will grow just at 3% now because the interest rates in the bank also have come down to 3% and fixed deposit rates have come down to 5.15%, and on that also there is TDS. And one thing what I like about mutual funds is even if you hold 1 crore rupees in your mutual fund, you don't pay tax till you sell it. Only if you sell and you have to pay a capital gains tax, that also if it crosses more than 1 lakh, then only you pay 10% and not 30%. Whereas for just holding the money in the bank, you'll pay the 30% TDS every 3 months. So you're paying the tax on your investments by holding it in the bank as compared to keeping it in mutual funds or even in shares, because in shares, tax is applicable only on sale. It is not actually applicable anywhere else. Only when you sell the units, whatever capital gains you make, only on that will be charged tax. But for holding it, you can hold it even for 10 years, 20 years, 30 years. There is no tax till you sell it. So that is the biggest advantage of mutual funds as compared to keeping money in the banks. And this is what I have learned during these days. So I must say very big thank you to Sir Sachin Relikar who has taken his time out. And I'm sure most of you must have enjoyed this program and learning. I have also done a small recording, but only thing there was a slight disturbance in between as far as the sound is concerned. Many people send a message that the sound is cracking, but it was slight. This was there as far as the internet connectivity. Sometime, not always. Most after the question answer started, everything was clear. Only in the beginning, there was some cracking of the sound in the voice, but that on the recording will be a slight disturbance. I will try and send the recording. Whoever requires it, please message me, and by tomorrow morning, we'll get the recording of the entire program. So I would like to thank each and everyone for your active participation. We had total 64 participants, out of which some, after crossing that 40 minutes, they had to rejoin. So, but we had the participation on this. And as far as YouTube is concerned, we have just touched somewhere around 60 more participants, but now they'll be actually watching it back. The viewers will start after because most of them who are busy at this time, they'll watch the recording of it because it is available on YouTube live on our channel, Navemarg Foundation. The same thing will be available on YouTube live. So if in case anybody has missed, you can still watch it on that and you'll see the entire recording is there on the YouTube live. Because last time's program, we crossed more than 300 viewers. So this time also we'll be able to actually reach out to many more people as far as this concerned. And as far as the upcoming program, now one program will be having on Friday, which I'm actually doing it for the JCI as well as the Lions clubs together, because they have invited as a guest speaker for me to address all the Lions as well as JCIs in Goa. So Friday, I will be sending you all the link for that program. It is basically regarding why is financial literacy the need of the hour in Goa? What is going to happen if financial literacy is not introduced in Goa colleges? What is the situation that is going to happen? And this all this statistics and all I'll be actually disclosing on Friday, and then we will come to know why exactly we need to teach our college students regarding managing finances. Because if you don't teach the college students about managing finances, what will be the outcome? You'll come to know exactly on Friday. So do join on Friday. It will be at 6 o'clock, but I will send you the invitation through WhatsApp on the same groups. You can forward it to all your friends and whoever wants to join there, because it's a public program hosted by JCI Coastal Salset as well as the Lions Club of Concon. So we are doing this program now for the coming week on Friday. And next Tuesday, I'm still trying to finalize it. We'll get another masterclass done on next Tuesday. So thank you all once again, and a very, very good night for today evening. Thank you. I'll end the meeting for today. Any closing remarks, Sachin, sir? But has
So thank you.
Mr. Dinesh has joined? I have not seen him.
No, he exited actually.
Okay. No, because I was thinking whether he would be
He was
there.
there, so he didn't. He said we can conclude. So thank you very much. Always pleasure to be part of your initiatives. Thank you, and we will be there for you always, as in when required. Thank you very much.
Yeah, thank you. I'll end the meeting. Yeah, thank you.